Deepavali ki hardik shubhkamnaएं and welcome to another episode of The Loan Project. In this episode, we are continuing our conversation with Tamal Bandyopadhyay and talk about some of the burning issues in our industry like buy now, pay later, the debt trap, and how should a borrower approach a lending institution and the whole aspect of loans. Please do watch the video, give your comments, and do subscribe to our channel. Thank you. Okay. Sir, another point which I wanted to check with you, since you told about this, we are talking about this bottom of the pyramid, is buy now, pay later. It is something which is now buzzword everywhere. A couple of days I was trying to buy a face mask on Amazon. The cost was 453 rupees. There was I will not name the person who was the partner there. They said they will split that into 4 installments. And then, I thought, let me go deep and figure out what are the terms and conditions. If I don't pay, what will happen? If I don't pay. So what I found, there was a total gap in terms of what's going to happen if I don't pay. Will they report me to bureau? In one example which they gave me, that if I don't pay 200 rupees, they will charge me 40 rupees for reschedulement, which translates to almost 20% charge on the principal. So a young boy and girl who are trying to now getting into this frenzy of online shopping right now, so right, and who have had no experience to figure certain things. Do you think we need something to tell this is actually a loan and this is not somebody giving you a gift of 4 installments?
Atul, I'm glad you have asked this question. I think this is the burning issue at this point of time, and I think this is the new credit market in India. I'm sure you are aware of it. That, like, say, for in Hong Kong, you need to pay your income tax in advance. Okay, like your past year's X amount you earn, and if the earning is the same, you need to pay. And it's very straightforward. And there are entities, because you are paying the tax before earning, there are entities who give you loan for income tax. Okay, for the tax. So somebody will pay, and then you pay in 12 installment, etc. Now that is one extreme, but I think we are getting into creating a different market now in India. Now, what was happening till now, the market? Forget the corporate loan market. Talking about the individuals market. Now we buy car, we buy home mortgage, etc. That's for primarily urban India, even in the mofussil towns, etc. Salaried class, tailor and traders, etc., etc. So long. Mr. Kamath, KV Kamath of ICICI 2001, they created, actually is the retail guru, and then it happened. Then HDFC took it over, took it forward, and everything was there. So that was one part. Then you have seen entities like Bajaj Finance, or say other NBFCs. They penetrated in a big way in smaller towns also, in all the white goods, etc. The moment you step in, you buy an air conditioner, you buy television, etc. You pay. You buy laptop, etc. But so that's also from the first level was into crores or into lakhs. Okay, the mortgage and car. Second level, this white goods, etc., into thousands. So 20,000, 30,000, AC and all. But now we have gone to the, as you said, 425 rupees or even 5,000 rupees, etc., etc. And that is because of that new ecosystem where the customer interfacing service provider. That's the new thing. Your Zomato, Swiggy, you are buying $1,000 worth of biryani, a kilo or 1.5 kilo of biryani, you pay in advance. Okay, so they can be a credit enabler. They can be. Now the question is, if I default, what is going to happen? Now, who on whose book is this? Is it on whose book is this, who is taking the risk, who is acting as a proxy for somebody else. I don't know. That's another issue. We need to look into this. But the fact is, now the credit market through that level has gone to that level. It's not, yeah, you used to do car and house, etc. That's happened. We used to do white goods. That's happened. Now for everything.
Yes.
For everything, even for 100 rupees, because of this, that's what I was telling you, that the disintermediation of the market. Now, the other part is this: if I default, what's going to happen? Whose book is this? This loan will be there. Who is taking the risk? These are all other part of it. As a customer, I don't need to know, but I'm getting this. And the other part of it is this: as I said, as a customer, because the risk is on the other side. I am buying. I don't have any risk. I am buying. But when I'm keeping money, I am keeping a deposit on you, then the risk is mine. So I will be more worried on the second part.
Okay.
You know, when I'm taking credit for my 1.5 kilo biryani, or for my walking shoes, jogging shoes, or for my son's education, all kind of things and all, which not running into not running into 20, 30,000, maybe 2, 3, 4,000, or not lakhs, maybe in hundreds. I would welcome that kind of disintermediation, because the guys who are not covered, now they are being covered. They can their affordability goes up, consumption demand goes up, economy gets the benefit, so on and so forth, and the risk is not the borrowers. But when I am keeping deposit through this intermediation, I will be worried on that, because then I run the risk. If anything happens, then
there's no deposit guarantees there.
I don't know. I just said I don't know. I'm sure Reserve Bank of India is looking at it. Is the DICGC rule, does it cover there or not? And all kind of things. So I don't know. So to cut a long story short, as a borrower, I don't care whose risk is this. As long I am getting money which I was not getting earlier, it will, and these are all consumption loans.
Correct.
Right? These are all pure vanilla consumption.
100%. Yes.
So it's good for me. It's good for me, as I said, and probably we'll see someday. But yeah, income tax only after a year, and that also because your tax website is not working. You'll get months and months to pay, so you don't have to take like Hong Kong and go. But a new credit market is being created, and I think that's a good story.
Does this need to go hand in hand, that we need to teach our guys how to manage debts? Do you think, sir?
Absolutely. I think there's a enormous amount of illiteracy about that. So that you will get this, then what people the lenders take advantage. They do all kind of
charges,
all kind of charges. Then they also sell other products, and also another problem again is the bottom of the pyramid market is this. Very rarely loans come only as loans. I'm not talking about only and only an interest. So along with the interest, there will be different kind of fees, etc. And also the bundle sales. Bundle sales of other products, insurance, mutual funds, so on and so forth. So this is not this is a financial literacy drive. And this is not a new story at all. This is for the decades we have been talking about this. I think 2005 monetary policy, April monetary policy 2005, if I'm not mistaken, or was it 2006? Probably 2005 policy. Dr. Reddy first spoke about financial inclusion, and since then now it is 16 years, 1.5 decades. I think we have moved a bit. But there is an enormous financial literacy requirement, and at every level, at every level, there are entities who are trying to do this. Even the savers also need the literacy. Because the people in that category, like say for instance the sabji vendors or the fish sellers, okay, you see their cash flow is on a daily basis,
Correct.
and the margin is very high.
Correct.
You can imagine in a village area, etc. Somebody, the buyer, the sabji sellers probably buying at 100 rupees and selling it at 150 rupees, or the similar thing about fish and all. So this 50 rupee margin on a daily basis, and that is why the microfinance, etc. say they can afford. Okay, but it does not allow us to exploit them, no?
Very
because
true. Very true.
So there has to be a fine balancing act. Yeah, and because your disintermediation cost also coming down because of technology. If you can use technology, like for instance the account aggregator, then what happens is this: your risk management cost of risk management is going down through the account aggregator way. Your collection ability, etc. also getting more far better. So your disintermediate digitalization is bringing down your disintermediation cost.
Yeah, distribution cost. Correct.
Why not pass on the cost to them? Okay, why not pass on the cost? Why do you have to charge so high? Because they are into high margin business. And similarly, they also need to be taught about savings also. Why you keep your money under the pillow, whatever it is. I mean, why don't you keep? I think some of them are doing it, but there is no doubt the fact that at that level we need. I mean, there have been financial literacy drive actively encouraged by Reserve Bank of India during Dr. Reddy's time, Dr. Subbarao's time also, at least I can imagine. So, but I think the mission is still not accomplished fully. Of course, in between we have PMJDY, which has an enormous. When I think it is something unparalleled, unprecedented.
Correct.
The number of people have gone under the fold there. The PMJDY fold, but again, yes, it has helped them, and this direct benefit transfer, etc. going, but it's I don't think we have been able to use this avenue to the advantage of the financial system and also for them. So yes, the basic thing worked out, that the zero balance account has opened. And some
there is no engagement, sir.
Crore.
I mean, there is no engagement.
Yes, so that's what we need to do that. That's what we need to do.
Okay, so I think we are at end of the time. So I have I ask one question to all my panelists. If today Tamal sir has to advise a prospective borrower, first time borrower, what would Tamal sir's advice will be when he or she is taking a loan? Let's say, for example, because according to me, sir, whatever halla we can create, the first introduction to a financial services for a young person is not mutual fund and equities, but it's a mobile loan, it's a bike loan, it's a iPhone phone loan. So they first borrow and then only they save. So what would be your advice to the first time borrower?
First time borrower, I mean, it's not a it's not a very wise advice. In a sense, I'm just saying it's a technical bit. The first important part is this: we need to understand how much I can borrow and what is my debt servicing capability. Because the simple fact is this: if I become a defaulter, then my credit core that will affect my credit core, and that will come on the way of getting another loan. So if you ask me, apart from looking at the fine print, checking the comparable interest rate, who is offering what, and also seeing the what are the clauses inclusive, is something else also coming on it, and so on. Are they pushing in insurance something on thing? All these things and all. But I think the first thing before that would be that should I take the loan, and am I capable of paying? This should not come as a deterrent factor, but I'm saying it is very critical to know, because if I default, then those days have gone. It's now I am on the credit score. My credit score goes down.
Data prints are there.
That does not. Yes. So and once this account aggregator also becomes more popular, it is happening with my concept. You can gather all the data, and it is across. It is sector agnostic. It's that it's others also not in the financial space. There will be exchange of data and aggregator. So if I default, then it closes the door for me for another loan. So I think the first principle is this: look, I'm taking this loan. I have to
should
pay
I be
back,
taking the loan?
and
Should I?
I should first should I take the loan, and if I take the loan, how much, and make sure that I don't default, because if I default, then my future in this credit market, the doors are closed. I'm not there. So that's the first thing. Then of course goes the other area.
And for a new lender, what is your, considering the fact that you have not been directly involved in lending, but now overall so much of lending, for a first joining new lender, what is your advice to a lender, not a banker? I'm focused on your lender.
No, it's say one is this primarily. I repeat the cliche. It's the opportunities in the market is huge. So let's not fish in the same pond. No. What is happening? The problem is this: we are you will find the lenders are already getting in the same areas, the same set of people who are subjected to. I am using this quote unquote subjected to credit, and then we end up over leveraging themselves and all, and then in the process we actually invite trouble for ourselves. So I think there are opportunities to look newer market. Just to give an example, today in Mumbai, if there is someone looks into that segment of the support service, the security, how much a security guard earns? I think 8,000, 8,500 kind of thing. And then they do some work. Then they do some work of cleaning the car, etc. And that. So average, 10, 12.
10 to 12, correct.
But can they become my borrower? Yes, they can. They can, depending on what they want. Similarly, the cook, the maid, their children's education. Why not? Just to give you an example, if a maid is, and they're all is a part of this India with aspiration, India with ambition. Correct. So even though, so there could be a maid whose husband is an auto rickshaw driver, and the maid is not exactly literate, so doing this, or cook is doing this, and they're sending their children to private school.
Yes.
English medium school, private schools, and all. And they need, at some point in January or February, they need some, or whatever that session comes, they need some 20 grand, which they can't afford to. There's a possibility somebody get that, and then you tie up with because most of the people who are engaging themselves, instead of giving cash, they do this bank transfer or some transfer and all. So why don't you tie up and make sure that you get the money, a part of their salary comes to me. So I'm just saying, there are opportunities if you are looking at things, and if you want to do, you are innovative and all. So even in like Mumbai, Bangalore, and Delhi, there will be millions of people.
Correct.
Like the security guards, the maid, the drivers, the cooks, etc., who are not touched by the financial system. What prevents us from tapping them?
Correct.
And there are ways of creating safety valves and mitigating risk.
Very true.
So that yes, I will not. It will be a profitable. So the bigger issue is this: a profitable business.
Correct.
As a lender, I need to see it as a business, and there are opportunities there, provided I have an open eyes. I have the entrepreneur skill. I am innovative, and I am
willing to.
I am ready to
risk, I guess.
I am ready to and I'm ready to welcome technology. There are opportunities there. Yeah.
Okay. Yes, sir. So thank you for your time, sir, and we wish to learn from your insights some more. But considering the fact that we are short of time, we will wrap it up right now. And Thank you very much, sir. It was really
Yeah,
insightful
Atul,
discussion.
thank you. Stay safe. Namaskar.
Thank you, sir. Thank you, sir.
Thank you for watching this video. If you are interested in the industry of lending or just trying to figure out various factors which play a role in the next role of your life, we would request you to hit like and subscribe to our channel. We would keep on coming up with content which is relevant to your needs and requirements pertaining to loans. Thank you. See you soon.